This past week, Advanced Micro Devices found itself in the spotlight, but perhaps not for the reasons it hoped. The company made aggressive moves to expand its AI footprint, from backing data center loans to deepening partnerships in India. Yet the market's attention was captured by a competitor's massive deal, sending AMD's stock tumbling. The big question this raises is, as the AI infrastructure race heats up, are AMD's strategic plays enough to carve out a meaningful share, or did this week reveal just how far it has to go to catch the market leader? Welcome to TickerWatch News for Advanced Micro Devices, Week 8, 2026. In this episode, we'll break down the key developments and news that shaped a volatile week for the company. We'll examine new partnerships aimed at expanding its data center presence and the competitive pressures that sent shockwaves through its stock price. It was a challenging period for Advanced Micro Devices in the market. Over the past month, the chipmaker's shares have fallen nearly 20%, significantly underperforming the broader market. For comparison, the S&P 500 composite saw a slight decline of less than 1% during the same time frame. The stock also lagged its specific industry group, the computer integrated systems sector, which lost about 1.6%. This suggests that while the overall market faced some headwinds, investors had particular concerns related to AMD this week. Several major stories dominated the headlines for AMD, showcasing a company aggressively pushing its AI strategy on multiple fronts. First, the company's getting more directly involved in financing the AI build-out. Reports emerged that AMD is backing a $300 million loan for data center operator Crusoe. The deal, financed by Goldman Sachs, will help Crusoe deploy AMD's AI accelerators at an Ohio data center. In an interesting twist, AMD's own chips will serve as collateral, and AMD has even agreed to rent the accelerators itself if Crusoe can't find enough customers. This move signals a creative and hands-on approach to ensure its hardware gets deployed in a competitive market. Second, AMD significantly expanded its strategic partnership in India with Tata Consulting Services, or TCS. The collaboration will bring AMD's Helios rack-scale AI architecture to India, establishing a data center blueprint capable of scaling up to 200 megawatts. This move is designed to support India's national AI initiatives and serve hyperscalers and enterprises, marking a major push to establish AMD's full-stack solutions in a rapidly growing technology market. However, the week's biggest headline, and the one that most impacted investor sentiment, came from a competitor. NVIDIA announced a multi-year, multi-generational strategic partnership with Meta. The deal involves deploying millions of NVIDIA's current and future chips across Meta's infrastructure. Given Meta's scale, this agreement reinforces NVIDIA's entrenched position with one of the biggest AI spenders. The market reacted immediately, with AMD shares falling on concerns about its ability to win over these top-tier customers. Finally, a new competitive pressure point emerged from a different corner. Amazon's custom chip business, which includes its Trainium and Graviton processors, is reportedly on the $10 billion annual revenue run rate, growing at triple-digit rates year over year. While it's something of an apples-to-oranges comparison, as Amazon's revenue comes from services using the chips, not direct sales, it represents a powerful captive demand within the AWS ecosystem. This development positions Amazon as a significant and perhaps underrated player in the semiconductor space. The news this week prompted a wide range of reactions from Wall Street analysts, reflecting a divided view of AMD's prospects. On the bullish side, Benchmark reaffirmed its buy rating early in the month, citing the company's growing leverage in the expanding AI data center market with a price target of $325. Baird also reiterated an outperforming rating with a $300 target, expressing optimism about the company's future AI unit forecasts and seeing meaningful upside in 2026. However, other analysts expressed more caution. Dave & Davidson initiated coverage with a neutral rating and a $220 price target. The firm's analysis suggested that while AMD's chips look competitive on paper, real-world success in large-scale AI depends on system-level integration and interconnects, areas where its primary competitor holds a significant advantage. Similarly, Goldman Sachs maintained a neutral rating, pointing to higher-than-expected operating expense guidance as a concern that could limit near-term operating leverage despite strong revenue growth. Zacks currently rates the stock as a hold. The overall narrative from the market seems to be one of acknowledging AMD's long-term growth potential in AI, but remaining cautious with the stiff competition and high valuation in the near term. The stock's sharp decline following the NVIDIA Meta deal indicates that investors are highly sensitive to any news that reinforces the narrative of NVIDIA's dominance. From a technical standpoint, AMD has experienced a significant pullback. After a strong run-up over the past year, the stock has declined sharply over the last month and is now trading well below its recent peaks. On the fundamental side, valuation remains a key topic of debate. Some metrics suggest the stock is trading at a premium to its peers. Zacks' valuation grade, for instance, is a D. Other analyses suggest its price-to-earnings ratio is elevated compared to the semiconductor industry average. However, bulls argue that this valuation is justified by the company's explosive growth prospects. Analysts are forecasting earnings growth of over 50% for the current fiscal year. The core growth narrative is centered on AMD's AI and data center business. The company projects its data center segment could grow at a compound annual rate of over 60% in the coming years, with ambitions to generate tens of billions of dollars in annual AI revenue by 2027. The partnerships with TCS and Crusoe this week are concrete steps toward that goal. The primary risk, however, is the immense competitive moat of its main competitor, whose full-stack hardware and software ecosystem is deeply embedded with the largest customers. This week's news showed that even as AMD builds its long-term story, its competitor continues to fortify its own. Looking ahead, the most significant event for AMD investors is actually a competitor's earnings report. NVIDIA is scheduled to report its quarterly results on February 25th. Given how closely the two stocks are linked in the AI narrative, AMD's stock price will almost certainly react to NVIDIA's results, and more importantly, its forward guidance. Strong numbers from NVIDIA could either lift the entire sector or reinforce fears about its unassailable market share. For AMD stock, a key level to watch will be whether it can find a floor after the recent sell-off or if concerns about competition and valuation continue to apply pressure. Looking at potential scenarios, the bull case for AMD is that its recent partnerships begin to translate into visible market gains, proving its strategy of offering a viable, open alternative is working. The bear case is that a blowout report from NVIDIA makes investors feel AMD's path is simply too difficult, leading to further downside. In the base case, the stock will likely remain volatile, trading on sentiment around the AI sector as the market waits for more concrete evidence of AMD's AI accelerator ramp in the second half of this year. Thank you for tuning in to TickerWatch. The information provided in this podcast is for educational purposes only and is not financial advice. Please do your own research or consult with a financial professional before making any investment decisions. We encourage you to subscribe, leave a review, and share this episode. Join us again next week for another look at the companies making headlines.